All right, so all the panelists are here. We're looking forward to a very insightful discussion, and I'd like to hand it over to Dibjyoti now. Thank
Good afternoon, everybody, respected panelists. Thank you for joining us. This is a post-lunch session. We know that it's a little tricky, but as thank you very much. As we all know that we are going to talk about an extremely important aspect of financial inclusion, because all of us are actually financial inclusion specialists, operators, investors. But everything that we have done in past 2 decades maybe unwind to what was started if the climate change, which is the risk is imminent now, if it goes that way. So a little bit about Annapurna Finance, because I belong to Annapurna Finance. So we are a pan-India company. Right now, we serve close to 2.9 million clients and households across rural and tribal areas in our country. We manages close to 10,000 12 crore kind of portfolio, and we have close to 1,600 branches, and most of our clients are women. And let me come back to the climate crisis. Let's understand what the problem is, how big the problem, the magnitude of the problem is. Uh, so, there's an estimate. World Economic Forum report says that the climate crisis will take out 12% of the global GDP for every 1 degree temperature rise. So, and there are estimation that probably next couple of years it goes from 1 to 3.5 degree kind of rise in different locations depending on our geographical location. So across globe there will be an impact, but then there are impacts specific to different countries. Can be it can happen. So it's a huge issue that we are talking about. In general, 18% of the economic loss globally if the temperature is by 3.2%, which I was talking to you. Drop in global agriculture food production, average sea level rising from 2006 to 12, doubling from 71 to 2006. So basically it's getting faster, the problem is getting bigger, faster, and the challenges are also getting much bigger. And in terms of the climate shocks, you all have noticed now 18% of reduction in global GDP by 2050. Direct damage from natural calamities would go to 1.3 trillion USD, uh, and so on. And particularly in India, 25% of the GDP loss by 2070, 63% of the GDP dependency are highly on nature and its services. Climate risk may cost 6.4 to 10% of the national income, and it will take back 50 million people back to poverty. And as I said, as a part of our financial inclusion program, our whole fight against poverty would completely unwind if we don't give attention to the climate change. And this is slide is little alarming. While, as I said, the impact is going to happen globally, but for our unique proposition, we at India is going to face a much more severity of the climate impact. The vulnerability index used by World Bank shows that we, like for example, we are here comparing ourselves with Brazil, South Africa, China, Indonesia, Vietnam, and India. And India is going to be the most affected for whatever reason, for our location and other things. So climate change is a reality, but it is even further real for a country like us in India. So we have to put our act together, and we have very limited time to do so, because it's we have seen that happening. I'm from a state called Odisha. We used to face cyclone every 2 3 years. Now every year we face 2 3, and these are all like whether it is flood in Bihar, which used to come like again 2 3 years. It's now coming every year, twice. So everywhere, in our areas, and it's creating a lot of difficulties for people. We do not have enough product or services for our processes to be done. Uh, the climate risks, as you said, it's not it's not gender neutral. It's impacting both male and female clients equally, and women uh, are getting impacted even further because of the climate change. Uh, because of this change by 2050, that may push 158 million more women and girls into poverty, and 232 million may face food insecurity because the production, particularly the agriculture production, is going to be impacted because of this. So that is something which we need to work around. And how do we should work? It is not a individual institution or a set of institution to do anything, because of the size on which we are talking about, the size of the problem that we are talking about. I think we as a community, we as financiers, government and policymakers have to come together to bring in delivering faster inclusive growth and protect against any climate vulnerability. These are the two set of work that we have to together do in order to attend uh, the program. Now let me also little bit of focus little bit on the climate change, particularly impacting our segment of the customer, microfinance customers, particularly that we are working with. 70% of the India's population have livelihood threatened. Extreme heat can push 1.5 million additional death. 50 million rural India can go back to poverty by 2040. I'll just give you one example. Increase in 1 degree temperature can reduce milk production by 2 liter a day. A 2 liter milk production gone, we are talking about 60 rupees, uh, you know, gone from the income, which is like 300 rupees. Out of 300 rupees per income, you saw all of a sudden you start getting a 240 rupees income with the same asset, with same investment. And that had happened last year, and we have tracked it because we do also a lot of dairy financing, and we try and understand the impact of the cash flow in people's life. Those are small dairy owners, 1, 2 cows, buffaloes. And if you multiply that by a annual number, you could see that there's already an impact of close to 25 to 30% in their income, globally, annually. So when we started at Annapurna think about it, and why we thought about it, because of this. We initially thought that because we are working with people at the grassroots bottom of the pyramid, and they do small loans, what impact they can have, our portfolio can have, or what can we do differently. It's not a really big issue. But the moment we started realizing, the moment we started learning about it, then we realized that this is irrespective of who you are, it is going to impact you, and it will impact you massively, be it your quality of portfolio, be it the livelihood of the optional of the people that you're working with. And we should do something about it. It's a very technical subject, though. I can admit that to all of you. It took us all 2 years to understand a little bit about this product, and I would like to thank few of my partners who helped us. Responsibility Action, Encourage Capital, and IFC for helping us, and water.org, to understand, put this thing into perspective for us, and our technical partner like IFC and IDAM and DFC to help us build that capacity. So basically, particularly for financial institutions, if they want to get into this business, they have to build that internal capabilities, as this product is very technically driven, and it has to be done. It needs a lot of patience and support from the institutions to help this out. And to discuss it further, I have a very interesting panelist with me, and thank you, panel, for joining us. Avistek Agarwal is the managing partner of Action Impact management. Anjali is the regional co-lead at IFC, particularly looking after climate change, and is also a consultant to us. Amrita Kapoor, who leads the Swadhar Fin Access and helps reach out to the last mile connectivity through education programs through she's so had done a great job in financial inclusion education. Now it's time for her to upgrade that to climate change now, because that's the reality we are all facing. And Satish, of course, is from responsibility, who helps us understand more deeper and bring in the whole global, because he looks after the entire global business in responsibility doing the climate change. Thank you guys for joining. I'll so I'll Hello. Yeah. So what I'll do, my plan is to talk to all the panelists two rounds. One round with a general question to understand what they are doing, and then second very specific question, because the best part of me is I know all of them personally, so I can dig a little bit deeper with them, and then I open it to you for your ideas and questions if you have. And this is going to be a mutual learning session for all of us, because it's a very new subject that we are trying to understand and talk to each other. But there is a problem, and we need to find out solution together. Thank you very much again, panelists. So, Abhishek, the first question again to you is how your institution is planning to address the climate change and its impact in the global economy.
Thank you, DJ, first of all, for having all of us here and organizing this session. Second, you are very smart and clever as always, where you have set the expectations at the beginning of the panel only, that this is what you are expecting from each of us, including even digging deeper. So, no, thank you very much for that great question. I think, from an Axion perspective, just quickly, 30 seconds, we are a global institution, and we operate on a three-pillar approach. One pillar is really the industry work, policy, and advocacy, which we do from Center for Financial Inclusion. Our second pillar of our work is really the advisory work, and this advisory work we do with the partner institutions, investee, non-investee, both, and digging deeper on looking at what are the areas in which our partners would like help. And then the third area is really investment, which is what I do, and there are many of other my colleagues, where we are able to help the companies to take the equity investments in the range of $500,000 all the way up to $15-20 million. But I think what is important, I think, DJ, as you are highlighting in this conversation, that climate is becoming a big challenge. It's a big risk, what we all continue to get to see. And what is really increasingly important, while we have been working for last 6 decades in the space of financial inclusion space, and last 2 decades we have picked up the problem on the digital inclusion. We felt that digitally things are not happening, so we started promoting and working with more fintech companies. And it's only last 4 or 5 years we have picked up the theme and thesis of digital transformation, helping the traditional companies be more and more digitally advanced, and clients can get connected, because we felt there was a digital exclusion. And while we have been in this space, we increasingly realize that climate is an important theme and thesis which we need to look at and address. And interestingly, across all the three pillars, whether it's the policy and advocacy, industry engagement, or advisory, or investment, we are looking at an institution level that how we can be more and more supportive of investing more money from a climate lens, whether it is climate financing, whether it is looking at climate tech financing, or others, or looking at from an advisory side, how can we support our companies in developing more and more climate resilient products, working with the end beneficiaries, where we could look at it along with the financing options, that what can be done. And similar for the advisory, so similarly for the industry work, looking at bringing the industry together from an climate agenda. So that's what I would say, DJ.
Thank you, Abhishek. Let me go to Anjali. Anjali, you at IFC are already working it for a long time. Now, can you give us a little bit of idea, like how are you doing, what are you doing, and how these institutions that you choose to work with, how it works?
Sure. Thanks, DJ. And I think before I begin, a huge thanks to the organizers, Access as well as Department of Financial Services for hosting the conference and for Annapurna to curating this session. I think it's always a little bit scary if the moderator knows you too well because you can't really say no to anything and any question. So while it's good to know, it's also a little bit scary for the speakers. Um, I think just two first, before I jump into the response to your question, two additional data points to what DJ already presented, and I think that was a great context-setting presentation, is that, and many of you would already know this, that India, the estimates are that India needs, just to meet its NDC targets by 2030, $2.5 trillion. And for net zero by 2070, we need about $10.1 trillion. What really comes into India again, as per sources, is about 44 to 50 billion dollars a year. So there's a huge gap, and I think which is why this session is extremely important, because one of the things is how do you really bridge this gap. And I think that's where organizations like Axion, IFC, responsibility, everyone plays a role. So for those who don't know, IFC is part of the World Bank Group. We are the largest development finance institution, focuses purely on private sector, primarily on private sector in emerging markets. Climate and climate change is a huge priority and strategic pillar for World Bank Group for the reasons that DJ you've already explained. Our president, the World Bank Group president, actually last year, announced that climate finance will be 45% of our own lending. So that's a huge target that we have put on ourselves. And just in last year, globally, we reached about $9 billion of climate finance lending. And South Asia, and in that primarily it's India, was one of the largest contributors to 9 billion. We got to about $1 billion. And we are hoping to surpass that this year. There are a number of transactions that we have already done, which again many of you would be aware of. We've invested in Axis, we've invested in Profectus Capital, in many other organizations like Bajaj Finance, all focused on climate. Now, IFC, works with multiple sectors and multiple players in the economy. We work with the real sector, we work with entrepreneurs, we work with startups, but there's a huge focus around working with financial institutions and primarily to bridge this gap. The way we work is also very similar to what Abhishek spoke about Axion. There are three routes for us. One is, we invest directly in financial institutions. So there is, debt, equity, and other instruments that we use to really, give them money for further on lending. So it's capital going into financial institutions to on lend for climate sectors. And those are the examples that I just gave. In this, we also try and look at innovative financing instruments. So we've looked at risk share globally. It's a little bit difficult to do in India, but we are still exploring. We look at bonds, thematic bonds like green bonds. We've done a green bond with Profectus Capital. We do green equity. We've done it with Federal Bank. So multiple instruments, but the objective is to directly get the money into FIs. Second is, how do you help the financial institutions utilize this money and get the right use of proceeds to get them into the green finance sectors? That is where, and that's the team that I belong to, the role of advisory comes in. So we work very closely with financial institutions to help them understand the entire market and to help them scale up this business. When we really started focusing in India on climate, I think about 4 years ago, we realized that the understanding around green climate was very limited. There was a huge confusion between, oh, I'm doing ENS risk, and that's what green means, but that's not true. So we've come a long way. The regulator also now focuses a lot on green, but we do a lot of hand-holding, capacity building, and introduction of new financing products, and to go beyond the traditional ones, which everybody is aware of. So, everybody thinks large solar, wind, etc. But we are looking at newer sectors, and I think that's where the micro lending part also becomes important. For example, green housing, climate smart agriculture, energy efficient product, electric mobility. So all of those are current focus of IFC when we work with financial institutions. And the third is, at the sector level. So we're doing investment, we're doing one-on-one advisory, and we do sector level work as well with financial institutions. That is where we partner with organizations, like Indian Banks Association, so banking associations, training partners, and to build capacity of FIs at large. because we cannot do one-on-one advisory with all financial institutions. It's impossible. We don't have that kind of strength. So we do a lot of work at the sector level to really bring the whole sector, to the point. We do market research, we do capacity building. So it's basically addressing the problem from three sides. One is guidance, the second is investment, and the third is capacity building.
Thank you. Anjali, can I ask you one more question? Like, we worked with a lot of Indian financial institutions. What are the areas that you think we need to strengthen in order to address to the issues?
Sure. So I think the areas that we really need to strengthen, one is to help them understand what is green and where can they make a difference. As I said, I think the understanding, while it's really improved in the last 2 years, it's still very, very limited. For them to really know what constitutes green. There is so much green in financial institutions' portfolio that they're not even aware of. So that is the one thing, which is to build or bridge the knowledge gap. Uh, Two for me is, the whole ecosystem. And I think this is the conversation that we have also had, that, just an IFC or an Action or, an organization is not enough. You really need to develop the entire ecosystem. So I'm sure there are technology providers and manufacturers in the room who don't know how to access FIs. Financial institutions don't know which technology to go to, what is the quality, where are you available, do you offer, after sales services, etc. So that whole gap needs to be fulfilled. So the information asymmetry needs to be fixed. So those are, I think, to my mind, those are two key things. The third is, of course, the regulatory policy side. We still don't have a green taxonomy. It is in the making, everybody understand. So that whole clarity also needs to come.
Thank you. Thank you. So, Amrita ma'am, I want to ask you this because what I realize that when we are talking about climate change and the impact and the product as a financial service provider, but it is impacting the people at the ground, and you are there in the ground helping people understand financial inclusion, financial management. Now this is an additional thing that a challenge that they're going to face. What is your take on how are you going to propose your activity in order to make that happen, reach those information to the field, or it is already people are aware of it, like you are in the ground, so please tell us something about it.
So thank you, Dibyajyoti sir, for setting such a wonderful context, such a relevant topic and so pertinent in today's time, because the climate crisis is really as big a threat, if not bigger, than the pandemic that we saw in 2020. So thank you for introducing Swadhar. I'll just briefly, tell the audience also what we do. Swadhar FinAccess has been conducting financial literacy, digital literacy, and inclusion in very remote rural areas and urban slums since 2006. We're completing 19 years in 2024. And we work with the Reserve Bank of India as part of the National Strategy of Financial Inclusion through the Center for Financial Literacy project, which aims at creating financial literacy and inclusion at grassroots level. So very remote rural areas of Bihar, Jharkhand, Madhya Pradesh, and Maharashtra is where we are working. What we essentially do is train and make aware vulnerable communities who are not even aware of their basic rights, let alone rights of financial literacy that they have and of inclusion, by simplistically in vernacular languages teaching them about life cycle needs, why they need to save, why do they need insurance, why is financial well-being so important for their prolonged well-being and also for their livelihoods. So to come to this pertinent topic of climate crisis, we are already seeing on the ground that the climate crisis is having a huge impact negatively on their well-being and even their livelihood, because already the farmers in Indian villages, and 90% of our communities are in agriculture or allied services. So they already have seasonal, occupation. They suffer because of that. Now, because of climate crisis in the villages across these states, we are seeing increased rainfall, drought, floods, increased temperature. So the livelihood is already, their income from livelihood is already decreasing. What we are also seeing is those community members who have access to formal services, formal financial services, have a savings account, can really cope with the climate crisis, can cope with any sort of disaster, can mitigate it and recover from it. because climate crisis also causes, destruction of cash balances in the house, and most of our rural communities, for example, in a remote area like Jhabua in Madhya Pradesh, just to cite examples, it's a tribal area. Khunti in Jharkhand, where we operate, it's Naxal infested. West Champaran in Bihar is a very rural area in north of Bihar, mountainous, very difficult to reach. We have a center there also. And they just keep cash in their homes, and due to climate crisis, floods, etc., they lose that cash. Those who have had access to, say, savings, fixed deposits, are in a better position to cope with climate crisis. Insurances which the government has already designed for these communities, Pradhan Mantri Jeevan Jyoti Yojana, life insurance, only 436 rupees annual premium is the most popular. All our community members who had already taken these up in the face of climate crisis or even any other disaster, for example, death or any other crisis, could recover from this because it made them resilient. Insurance makes vulnerable communities and all of us also resilient. So one is the Pradhan Mantri Jeevan Jyoti Yojana, and the other is Pradhan Mantri Suraksha Bima Yojana, which is the accidental insurance. And we all know that climate threat does cause accidents, loss, etc. Our trainers across these 4 regions, and we run 200 centers across the country, covering, each center covers about 200 villages. Our trainers also provide them hand-holding support to get the claims in case of this crisis. So to say we are gearing up, because we've been seeing this since last year, Dibyajyoti. In fact, I was just having a conversation with Anjali how we are now at Swadhar geared up to including information on climate crisis, how it can really threaten vulnerable communities, especially the women and young girls, youth in those regions. So to explain to them and include this topic in the life cycle needs, also discuss with financial service providers what would be appropriate financial products and services. For example, savings, insurance, credit, and digital payments are very important. We need to design this for underserved communities, keeping in mind the climate crisis and the threat it poses. For example, it's a well-known fact that even during the pandemic, those community members who had access to digital banking were able to receive the direct benefit transfers due to the Pradhan Mantri Jan Dhan accounts. Similarly, in terms of climate crisis, those who are savvy digitally, and we train our communities in digital banking, it is so important. That is going to be an enabler for those communities. So across these 4 products, let's make them more sensitive, is my appeal to financial service providers, the regulator. Have some more regulations around policies for financial inclusion to really mitigate the risk of climate change.
Can I ask one more question? Like,
Sure.
what, we have talked about people. What about the institutions? Like, what are your plan for those institutions to get prepared themselves to those climate change? The institutions, the intermediaries, the financial institutions.
Okay, so of course, the institutions, how we are gearing up for climate crisis and this big changes, we are a non-profit Section 8 organization, and we work with funders and partners. So we are going to become, more agile in terms of uh, setting aside our funds also, our training also, and resources to really be able to prepare for this threat, which is actually at our doorstep now, and work with funders and partners, like I was just talking to Anjali, to get our whole organization trained in this climate crisis management, so that we can further empower our communities, which is what we did during the pandemic. We trained our whole organization. Our whole organization was certified. Each trainer, 500 of us got trained, including all of us, on the pandemic. Similarly, we have to first learn about the threats, understand what are the products and services which will really mitigate risk for those underserved communities, and then transfer this training to them. That's how we're going to prepare.
Thank you. Thank you. So, Satish, so you're from Chennai, so I don't have to tell you the climate change and the problem with the climate change. So, you're flooded every day.
Every
it
year.
seems, huh? So what is that? So give me some, because you work in different countries. Give us some global perspective. How the climate change has been addressed by global economies in different part of the world, and what we can learn from them in India, and also like how do people have planned to go to this net zero journey? If you can give us some idea.
Sure. So thanks, DJ and Annapurna team, and also the organizers for inviting me for this panel session. And also kudos to the Annapurna team for the great organization of this panel session. So maybe I'll start with our responsibility journey, how we got into the climate finance. So we started, financial inclusion was our first starting point 21 years back. We started supporting institutions across emerging markets to help them with the financial inclusion target. And then 10 years back, we realized while financial inclusion is important, equally climate crisis is also growing. So we also need to address this climate crisis. And we started developing our climate finance portfolio. So we started as a very small portfolio targeting energy access in Asia and Africa. And then we gradually moved into supporting financial institutions across emerging markets, funding those institutions and helping them develop a portfolio towards climate finance. And then we also started gradually moving into financing companies who are in the climate tech space. So that's how our journey started in climate finance. And as Anjali mentioned, so we also realized early on in the process, climate finance is not about lender borrower relationship, it's about partnership. So you need to engage closely with the investing company, you need to build capacity, you need to help them grow their portfolio. That we realized 10 years back, and then we built this in-house advisory specialist team, so the team which I lead globally. So I built this team from scratch. So this is very critical for responsibility for any new products and also for our existing products to support them. And while we initially focused on renewable energy, then we gradually moved into energy efficiency. Now we also have a strategy which is focusing on climate smart agriculture, which is a global strategy where we invest in agri SMEs, where they work with their upstream farmers to implement climate resilient practices. And we also realized now, while everyone is focusing on mitigation, but we also started thinking beyond mitigation, because now the climate crisis is so high that we need to look beyond mitigation. So we also started looking at adaptation resilience. Now, this year we have also invested in two water companies where they are into water recycling. So water recycling, if you look at, typically it's a large infrastructure picture, but if you look at deeper what impact that is bringing, it has its direct adaptation benefits to the industries as well as to the communities surrounding the industries. So that's how we started, and then we are now navigating more towards resilience. Now we invest in companies across electric mobility, energy efficiency, renewable energy, across industry decarbonization. So when you look at net zero, right? So for net zero, if you look at from a corporate perspective, they need different solutions to meet their net zero targets. They need a renewable energy solution. They need an electric mobility solution for their logistics. They need a wastewater recycling. They need a electric mobility, energy efficiency. So what we do as responsibility is that we fund these companies who provide services to those large corporates, so that enabling an ecosystem for large corporates to achieve net zero.
So what exactly we should do to continue this progress? In India particularly, if you
Yes.
you are working with many organizations, what steps an institution need to take?
Yeah. So if you look at from a investor like us, I think we should have more. We should also build our capacity, like we have in our case and also in IFC case. So I think every investor should also build their in-house capacity so that we can better cater to the market. And same applies to the financial institutions, right? So it is important to build the in-house capacity, and that starts with the management commitment, because the management has to commit to that capacity. So once that management commitment is there, then you build in-house capacity and then leverage this capacity to scale investments towards these sectors. So that is one. And number two, innovation is required from product in terms of understanding the need. Once you have in-house capacity, you can also understand the pain points of your borrowers, and then you can develop products which are suitable, which are more suited for your borrowers. And then also we should innovate in terms of product delivery, right? It's not just about lending, it's about partnership, it's about working with them and advising them, giving them advisory. So I would say three things. One is management commitment to build capacity and also to drive this business towards climate, and then innovation in product and innovation in product delivery.
Thank you, Satish. So I'm back to you, Abhishek, now that he has talked about all the steps
Now the next step is investment. So I want to know that how you look at this correlation between climate finance and financial inclusion, and what is your perspective as an investor, when you consider investing in an institution, or is there a correlation or not at all?
No, thank you, DJ, for that great question. And I think, before I go on answering my question, what is important is, as Anjali pointed out, and I hear Satish also using the similar language, is that we as an industry, and when I say industry, it's the practitioners and the investors to a large extent is starting to use the similar language. I think Anjali used the word green finance. We hear the word often climate, green finance, climate financing quite interchangeably. And it is very, very important that, and again, I will take an analogy today, and this is getting quite common, impact investors. Everybody is getting colored with that impact investors. I fear that it should not happen. Why? The climate is a very, very important theme and thesis, and we all need to run with that. Everything starts to brush under the climate. That's my big fear as an investor in this space. As Axion, we have always been very responsible, and we do not shy and being fearful of picking up the risky assets or something to venture out to experiment. And if we fail, we are proud to say that we tried, we tested this, and we failed. Maybe market need not to experiment on this. So I think when we look at it, so that's for one big request, and I'm very grateful to the organizers and DJ, to you in the Annapurna's team leadership, where you do not hesitate in picking up these assets, experimenting on some of this, and even openly talking about it and encouraging others that this is how other partners, other practitioners needs to do it. So something, yes, you asked me the question, so I need to go back in terms of, and I know otherwise you will keep on probing, and your idea is really to tell the rest of us that how they can access those dollar investments from all of us. So I think the way we look at it for us, while we have been a financial inclusion investor and our focus is going on, I think what other folks are also talking about, how do we shift the gears to be more and more responsible and bring this climate lens there. So as we are looking at, and I think I saw you also mentioning on one of your slide, that as we have made an investment in Annapurna, and while our fund is digital transformation investment fund, there is a substitute theme and thesis running as an investor in our mind, that how are we going to influence the climate products, climate resilience across the institution, and then going it towards the end beneficiaries also. And what do I mean with this? So when we look at a microfinance institution, a large percentage of microfinance institutions clients come from agri side of it. They might be in dairy, they might be in agri. Now if we are into dairy or if we are into agri, do I expect a farmer to change its crop pattern overnight? Answer is no. It's a farmer. They are worried about whether they will have the meal on the table overnight or not. They are, again, they all hear about the climate, but it's not their concern. So a lot of responsibility lies on us as a private sector, as a public sector, to bring the things together. And I'm thankful even Amrita is acknowledging there being an educator, that how do we impart this knowledge, disseminate the knowledge, that by bringing these changes to our crop cultivation, and if to that crop cultivation, if institutions are able to finance it, I think then you will start to bring the changes. So how we can do without compromising on the income patterns of the farmer, it should be able to increase their income levels. So if we are able to design and curate the products which should be empowered with the knowledge dissemination to the end beneficiaries, I think you will have one winner over there. So when we come and evaluate the investments, we look at it, what is the openness and willingness from the management? Is management really willing, and how are they going towards it? And over there, if there is, again, you don't, while looking at any of these things, you don't have to compromise anywhere on your returns. Your returns would come on from these institutions as you diversify your outreach, your products, and you deepen your customer engagement. Because what your customers are looking at, how relevant are you going to be for them in the time of the need? One of the product which we worked with your institution only, DJ, was an emergency loan, which is a very popular product in microfinance industry, but nobody sees this product as relevant as it can be. If it is an emergency product, it should only be used in emergency. It should not be a cash cow either for an institution or for the client where they are dipping down into it as and when this is available. So it's about bringing that behavior change in the borrowers. And for that, it is important that even we as an investor have a behavior change. And to Satish's point, we need to build capacity at our end. We need to be educated that how we are going to evaluate, how are we going to look at and be willing to underwrite some of these. So DJ, from that perspective, while we put in the capital out there in the institution as an investment capital, there is real no allocation from our point of view that X percentage of dollar or X amount of the dollar needs to go either for digital transformation or for green financing or for green asset. It's about working with the management hands in hand, that is there a willingness? Can we work on something like this which can help your customers, your borrowers, by bringing some of those? And as we find those openness, very happy to start working. And then there is a longer future where you start working together to build some of those assets out there.
No, thank you. So I got an investor and a lending institution. You guys can always reach out to them. They're going to put their money to you. Yes, so no, I didn't ask about you. I said, do you do the capacity building? So the next question, the question is to you now. The question is to you. So, how important it is for us to have a taxonomy in India, and how it is going to change everything that we're talking about?
Great. So I did mention that we don't yet have a taxonomy, and I think another interesting fact is that most of our neighbor countries have a taxonomy. So, you know, Bangladesh has
What
a
is the
sustainable
struggle?
finance
You are working on it. So
taxonomy.
what is the struggle? Tell me
Yeah.
why it's not there.
No. So hopefully it will happen soon. I mean, of course, in the budget, the finance minister did announce that we will have a taxonomy. But actually, the work started, and again, this is something that most people know. Work started a couple of years ago. There was the discussion around climate finance in India started about 2020-21 with the setup of the Sustainable Finance Task Force, which was led by the Government of India, RBI, SEBI. Multiple partners were co-chairing that, and there was a working group around taxonomy. And we are very happy that the finance minister has now taken this to the forefront, and she has said that we will come out with a taxonomy. And last week we actually hosted a conference in Mumbai, and we had a DEA person who was the keynote speaker, and she herself spoke about the taxonomy. There's a concept note around the taxonomy, green taxonomy, which has been
Manji, sorry
circulated.
can you also give a little bit of flavor, like for the audience, that how it is going to change the moment it is
Sure,
there?
sure. So what a taxonomy does is, it gives you whether this is green or not in very, very simple terms, right? So today, if you are doing something, whether as an entrepreneur or as a financial institution, you may or may not know whether it is green or not. A taxonomy gives you all the information to figure out that yes, what you're doing is aligned with what the government of India thinks as green. So how does it help you? Is one, that it helps to route domestic and international capital into climate business, because there are so many investors who are looking to invest in climate, but they need to know that you're doing the right thing. So it really enhances the flow of capital into climate, because then investors come and say, okay, you're doing these 10 activities, this is where I want my money to go. So that is the first thing that it does. Two is that, linked to this, it helps you with better disclosures, because you can now go back again to your investors, to your customers, to the regulator, that this is what I am doing around green or climate, that this is where I am investing. And again, it gives you visibility, it gives you more investors, it gives you the customer respect, etc. And so those are the two main things that a taxonomy will help you. And there are multiple types of taxonomy. They're qualitative, quantitative, etc. It depends upon each government how they want to look at it. But I think it's high time that Government of India comes up with a taxonomy. Just one small point, I know we have 10 minutes left, is that it's not that we have no taxonomy at all or no definition. So, the Government of India has had the Sovereign Green Bond Framework, which has a list of what is green. SIDBI is, came out with this green scheme, which also has a list of what is green. NABARD, we understand, is working on a green taxonomy. But what is important is that all of this comes together and we have a single document to look at, rather than running behind different documents and one FI saying, oh, you know what, 80% of my portfolio is green, aligned to this document, and the other one says 50% is. So we really need to bring all of this together and have a comprehensive document in place.
Thank you. So, Amrita ma'am, a quick answer from you. how this climate awareness development, how can we do it in the bottom of the pyramid? What's your take on that? And what are the feasible way to improve this knowledge at the bottom of the pyramid?
Thank you, sir, for this wonderful question. And it has to start at the bottom of the pyramid. Like I just said earlier as well, what we are going to start doing is, first step is always creating awareness, because villagers in remote rural zones of India are not really aware of the climate threat. And I again do compare it to the pandemic, because they were not aware. When you're not aware, you can't help yourself at all, and neither can we help them. So creating awareness. So more and more we are already starting to do research around climate threats, how they will impact different states, different zones in India. Some are drought stricken, some have high temperatures, some are just have been wiped out due to the floods. Their livelihoods have been wiped out as well. So first create awareness that this threat exists, how they can cope. Firstly, how can they proactively make themselves bolster their resilience, because we do make them financially resilient. Now we have to bolster vulnerable communities for climate resilience. And like you said, this is new for us. We've already started, is the good news. We've started doing research. We are building up content on it. So once we make them aware that the threat is there, but if you have enough savings, if you have insurance, and insurance is a great, bridge between a vulnerable community member really becoming ruined and being saved, because insurance can really help them jump back, bounce back after the disaster happens, because the climate risk can not only finish, there will be economic shock, health shock, there could be death, there could be end of livelihood. There's just so many disasters that could happen. So encourage savings. Savings is the first most important thing that we're going to start, encouraging all our community members to start taking up. Second is insurance. Just now, like I said, we only have two insurances for the underserved communities, the PM JJY Jeevan Jyoti Yojana and the Suraksha Bima Yojana. We are talking to financial service providers, because we do have review meetings with our 9 public sector banks that we are running the Center for Financial Literacy project with. We're already always requesting them and other players as to design products and services that are sensitive to climate change, and also those which address the needs of the grassroots. That is needed. And finally, educating them on digital banking, because if they are digitally savvy, if they have understood and overcome their fear of DFS, then they will be climate resilient, because in case of any disaster, digitally they can receive that aid in terms of money, and then get their food, and at least kind of recover from the climate crisis.
Oh, thank you, ma'am. Satish, we all are, when we understand climate finance or climate, mostly we are talking about mitigation, but adoption is also a very large area where, you are very active. Can you help us understand what it is, and with some global case studies to back it, like how it is working, so
Sure.
for us to learn?
Sure, yeah. So as I mentioned earlier, so for the climate crisis, mitigation alone is not sufficient. So we have to look beyond mitigation, and adaptation resilience is very key. So, and as an organization, we also started moving towards that direction. So unlike mitigation, where it's a global phenomena, right? So it's a renewable energy project anywhere in the world, it's called a mitigation. But adaptation is not like that. Adaptation is very location specific. So you need to understand the local vulnerability, where the communities are exposed to, and what type of measures that could be taken to mitigate that risk. So adaptation, and also if you look at adaptation financing, people always look at adaptation financing is only for public sector, large infrastructure, not for private sector, not for small financial institution. But that's not the case. While the whole topic started with the large financial institutions and large public sector institutions, but private sector, local financial institutions have a critical role to play, because the vulnerable communities are the bottom of the pyramid communities. They are the most vulnerable to climate change, and they are at risk. So they need solutions to address the risk. So what we see globally institutions are started looking at climate risk, started integrating climate risk assessments into their portfolio development. And then it has to be an inclusive approach, right? So when institutions, when I was talking to a few institutions, they were initially looking at developing a climate scoring model, and then they were planning to exclude those borrowers who are exposed. But that shouldn't be the case. So it should be an inclusive approach where you identify the climate vulnerabilities they're exposed to and develop solutions. So from our perspective, adaptation, we look at from four sectors. One is agriculture, water, housing, and healthcare. So if you look at agriculture across the value chain, you can look at adaptation. So right from production, where the farmers are exposed to extreme drought, extreme flood, and they're exposed to extreme heat. So there are solutions where they could integrate drought-resistant crops. They could implement water management practices. So across the production level, you can integrate adaptation. And the key part within agri value chain is the storage and logistics. There's so much of food loss happens in the storage and logistics part. So there are solutions developed for efficient warehousing, cold storages, energy efficient cold storages. And so across the value chain in agriculture, there is adaptation. And then in housing, while people look at housing, green buildings are for large industry, large buildings, but we also started looking at green buildings for a housing sector, especially the affordable housing sector. So in Ghana, we were looking at an investing company, a financial institution. So they were lending to local people for building affordable houses. So when we pitched them about the concept of why don't you integrate green into the affordable housing, they said no, because we wanted to, our idea is to build, come up with the affordability, because we wanted to come up with the idea around $10,000, $20,000 range of housing. So if you add green, then it's expensive. Then we have to sit with them to explain them, no, it doesn't have to be an capex heavy. You can also integrate adaptation and mitigation measures through design. So that helped them to understand the product, and then they built a local affordable housing product. I think that could be replicable in India as well.
Yeah. No, thank you, Satish. I promised the audience a question. We were very few, 3 minutes left. You can take two questions if allowed by the organizers, or any comment. You know, we're here to learn. This is something which is very new. So, you guys want to give us some ideas? Yes. So, okay, fine. So, Anjali, yeah. No, I think they're all mesmerized by what you were just.
I think just on the green housing piece, and Satish, you and I have discussed it, it's something that we've actually done in India. That also links to what Satish earlier you spoke about, innovation around products, right? And the continuous learning that organizations like, all of us sitting here need to do. So we've, as IFC, developed a green housing, affordable green housing product. And it's not expensive. We're able to certify that your self-constructed affordable house is green. And we're happy to exchange further notes, but just want to say that the product innovation and then going to customers and convincing them that this does not come to you at a higher cost is very much possible. But that's where the onus also lies on DFIs to continuously do this innovation. And go to the market.
No, thank you very much. Thank you all. We are right on time. Please, ma'am, come to the stage and do the rest. I will hand it over to you.
Thank you, panelists. A special thank you to Dibjyoti for such a well-structured session. It was very nice to hear how each of you, in your own words, the panelists, have emphasized on building in-house capacity, on leveraging what's available locally, whether it's knowledge, whether it's networks, whether it's innovation, how to foster that, how to build an ecosystem that's going to help foster that. So I would like to invite the audience, who's been a very patient listener to this session, and indeed, like you said, a very mesmerized audience, to felicitate the panel with a huge round of applause. We'd also like to offer a token of appreciation to each of the panelists. After the picture, 1 second. So we have a short break right after this. You can each connect with the panelists, and continue this discussion. We'll be back at 3:30 for the plenary. Meanwhile, please have tea and snacks outside. Thank you.